do you think there's room for uranium to continue rising in price? Any
This is
changes in that
absolutely
market?
one of those trends in motion. It's one that's happening now. The
Mm,
demand side, it's massively skewed towards the demand. Like the demand not only is not going away, which was a legitimate fear 5 years ago, or BRICS countries are building these things as fast as they can. China has scores of them on the way, and other countries are trying to ramp up as well. Even Europe has pivoted towards your nuclear. It's part of the green taxonomy now.
Welcome back, everyone. Today I'm with Lobo Tigre. He's the author of The Independent Speculator and long-time analyst for the mining and exploration industry. Lobo, thanks for joining me.
Happy to be with you, Jeremy.
So, you're known on Twitter as the due diligence guy, and you've been doing due diligence not only for the Independent Speculator, but you've had a long career with some famous publications in the space, going all the way back to Casey Research when you were the editor in chief of the flagship newsletter at that publication. So, if we can start at the beginning almost and walk it all the way back through your career, how did you kind of discover mineral exploration? How did you get into hard assets, commodities, and what kind of attracted you to this space all those years ago?
Sure. Well, it's funny. It's actually almost exactly 20 years ago that Doug Casey and his then business partner, David Galland, founded Casey Research. Doug had been already in the business for a long time, but was getting tired of the day-to-day running of the business and writing all the time, right? So David took on operations, and then they got an office, they hired a secretary, a marketing guy, and then they wanted a writer to help, with the writing and coordinate all that stuff, edit, different inputs, and that was me. I have to say, I didn't know really much about geology. I was always interested, but I never studied it. People mistake me for a geologist often. I'm not one. I just play one on TV is my standard line. I'd never studied finance. I had never bought a stock before. I didn't know what a warrant was. So completely green. They just brought me in as a writer. Um, but I do like geology. I'm always been fascinated by it. And I like to travel and I love to write. So I got paid to do all three of those things I love. So I just dived right in, and I was so excited. I was so happy. And I guess I learned a thing or two. So I went from, writer and or editor. And by the way, Rick Rule contributed, Brent Cook contributed, other people were contributing. It was my job to massage it all into one seamless whole. And of course, Doug contributed. Um, so I went from that to actually understanding what I was writing about. And I remember it was in 2008, Doug Casey had some, and by that, it was around then that they put my name on the publication, but specifically to the point of the question, it was in 2008 that Doug Casey had some money stuck in a US account. So he needed a US listed stock or some stocks to put some money into. And he asked me what I thought, what would I recommend? So for my mentor to ask me for a recommendation, that was when I felt like I had arrived as an analyst. So
Hmm.
4 years of, never mind full time, but like double time or triple, like I just dived right in. I loved it. And yeah, so I did due diligence for Doug and company for almost 15 years.
Mhm.
And in 2018, I became the independent speculator, um, continuing to use the network I developed then and relationships with, Doug and David. We're still in touch. And Rick Rule just came back from the Rule conference, attempting to help people with their own due diligence. People want hot stop tips. That's the main thing people really want. But I see myself actually as an educator. I would like, and I called the publication the Independent Speculator because I would really like my clients to become independent speculators. And the best compliment they can give me is after a few years of subscription, say, yeah, you know what? I've got this now. Thanks.
Mhm. Well, that's good, and that's a good way to look at it. And there's definitely a lot to learn because you're not just learning about mining, mineralogy, geology. You're also learning about capital markets, and there's sort of many sides to this game that we're playing. But um, and if you take it back to those, well, actually, I'm curious. What was the? Do you remember the stock that you recommended to Doug on that first recommendation?
No, it had to be US listed and yeah, no, I don't know. And it wasn't like I discovered some, gem that he hadn't thought. It was just a case for maybe a half a dozen US listed ones that I thought would do really well going into 2009. So it probably included your Wheatons and Francos and then some
Right.
juniors. I
Yeah.
don't remember. But I do remember that they did well, and he was pleased afterwards.
Right. Okay. So that's an interesting time and era, 2008. Gold had been on a great run from the late 90s through the 2000s. We'd had, obviously real estate market crash, and that would have been fairly early in your career. I guess what were some of the big takeaways as an analyst in those early years of your career, watching a global recession, massive crash, and then
Yeah,
how
yeah.
did that apply to commodities and
Oh, we
what were you
could do an
discovering
hour
at
on
that?
that alone. But yeah, no, I have deep scars from that, powerful learning experiences from that. So, 4 years in, it wasn't, entirely wet behind the ears still, but, had a lot to learn. Several things stand out. One is, it was, I wasn't that experienced, but it seemed obvious to me and obvious to all of the, my mentors, my elders, the people that I respected, that the sell-off in gold, for instance, in 2008 was ridiculous, overdone, typical in a liquidity crunch. People are panicking. Your margin clerk is calling you and saying, you're not asking you if you're going to sell. They're saying you will be selling. What do you want to sell? And, what could
How
you get a
much?
bid on? Gold was one of those things. So it was so extreme, so wrong-headed in the face of what was happening. It was a spectacular opportunity. And we saw that, that was something that we acted on. Personally, I bought bullion at that time. I think I didn't bottom ticket, but I bought bullion in the 700 range at that time, which worked out phenomenally well. By the end of that very year, like gold and cash were really the only things that ended 2008 itself. Okay. Gold was actually in the green, cash is cash. So, that a waterfall event can create a huge difference between price and value is something that really was driven home to me. I remember one example was on the stock side it was Tech Cominco back then. And this was like a $50, $55 stock that dropped to the low $3 range, as I recall. And I remember taking that to Doug and the team and saying, it's tech, it's like, $3, come on. But if you looked at it, okay, you could find problems with it. They had debt covenants and issues. They had serious issues then, and there was some question whether they might survive. You didn't know what was going to happen, and it's primarily base metals. Gold comes screaming back right away, but it took copper quite a while to come back from that GFC, as we call it now.
Mm-hmm.
But it was tech, it did on sale for $3. And if memory's not mistaken, by the time that, surge up into 2009, 10, 11 was done, that was a $60 stock. So it was not a little fly by night junior, but a major company was literally a 20 bagger.
Mm-hmm.
So the ability to recognize that type of opportunity was one. On the more painful side, the number of people who bought on the way down and were catching knives. And honestly, my role in that, I wasn't just a cheerleader saying buy, buy, buy every month, but I know that, I could have said more to warn people, early in 2008, we could see it rolling over. We'd written about a currency crisis. So we were definitely on the alarm side of the bandwagon. We weren't cheerleaders for mainstream investments or anything else.
Mm-hmm.
But a great mining stock sells off 50%, and it's, the value hasn't changed that much. It looks like an opportunity. And so personally, I feel responsible to some degree for some of the losses some readers suffered on the way down. And that is a huge impact on me now. Like,
and when you say
avoiding losing money now is a giant part of what I try to do. Sorry, go ahead. What were you going to ask?
And when you say the way down, are you talking about those like 2012 to 2015 years, kind of after that?
No. 2008 itself.
2008 itself. Okay, yeah.
Yeah, I mean, during, like, it's one of those things, you go over a waterfall and you think, oh, we've hit the bottom, but it's just like a ledge, and then there's another waterfall down lower after that.
Yes,
Right?
yeah.
Yeah, and I think based on that experience, I was more cautious on the long slide down from 2012 to 2015.
Okay.
I think I was more measured still you're a newsletter writer and the marketing guys are on you for some exciting ideas. I'm sure there are many things that I said then that I would not say again now.
Mm-hmm.
But yeah, so recognizing the difference between price and value, making sure that even if you think there's going to be a crash, which we did, that you don't go all in. So you have cash available to take advantage of a sell-off, and then being disciplined, right, about it, and not getting too enthusiastic. And maybe after the crash, the other big lesson is nobody amongst my elders thought that the powers that be could paper over the crash of 2008 and that things would come roaring back as quickly as they did. So, were they wrong? I think they were pretty smart and they were independent. They certainly weren't drinking the mainstream Kool-Aid, but we were wrong.
Mm.
So no matter how much any given narrative makes sense to you, and gold bugs and mining, people, the type of people who invest in mining stocks typically tend to be contrarian, not mainstream investors, and they're willing to see the dark side of any news, right? The recession is always around the corner, right?
Yes.
So don't buy your own BS, and don't convince yourself what's going to happen. Nobody knows what's going to happen. Just yeah, that's another powerful lesson. Sorry, I said we could talk a whole hour about that. I don't mean to go on, but that was, as you pointed out, deeply formative for me. That has shaped me as an investor today.
And I think that there's, realistically, you can read about it in the books, but until you've lived through a couple of cycles, it's really hard to, pull that information in and allow it to really resonate with your investment philosophy. So, speaking about your investment philosophy, how, I guess, since then you said it kind of changed. Because commodities ran a little bit after the 2008 crash. We had a pretty good, sprint into 2011, and then we was kind of almost a long bear for a couple little jumps, but really 6, 7, 8 years of unfavorable commodity markets. How did your philosophy change over, the kind of the first half to this last sort of decade with a commodity market that is not what it was in the late
Yeah.
2000s?
Well, I guess overall, I'm just much more cautious. I call myself a value speculator. Like I'm not a wild gambler. It's our friend Rick Rule likes to say, "Got a hunch, bet a bunch." That was never really my style, but I was more willing. Doug Casey would say, worth a punt," right?
Hey,
And
yeah.
and and I'm basically, I never buy something on the worth a punt basis. I want a discount to NAV or
Mm,
NPV, or where those numbers aren't available. There's something I call success in progress. So like the company has no deposit, so officially there's nothing you can put a value on.
mhm.
But it's more than a hope or a gleam in a geologist's eye. They've got a discovery and they're drilling it, and whatever their thesis is, it's a vein like this, or it's a disseminated deposit like that, or it's a shear zone and it goes for 3 kilometers, whatever that is, and they're drilling it and the results keep coming. They're consistent. I think there's a lot of money still to be made, maybe not a 20 bagger, but a high multiple to be made as that goes from a discovery to a 43101 compliant resource, in
Right.
the ground. A lot of drilling has to happen there. And if it's right, if it's the real deal, every batch of drill results adds value.
Mhm.
So yeah. And, basically, I just don't even bet on pre-discovery exploration at all.
Okay.
Uh, if I wasn't a newsletter writer, I probably would have a gaggle of prospect generators and just be patient. Those can take years and years to pay out, but it's the smart way to play pre-discovery exploration. With the impatient people looking over my shoulder, I just don't buy pre-discovery exploration. Success in progress will get me in. The pre-production sweet spot will get me in. Uh, for an overlooked producer with a strong growth profile that's delivering to the bottom line, that will get me in. I've just, as I say, I've become a value speculator.
Hmm.
And if you look at my track record, there's on every one of our pages, there's a track record in the footer at the bottom. You can see I've taken some lumps, some big lumps. I don't always get them right, but I've actually made money on more stocks than I've lost. And the average gain is still pretty sweet.
And that's sort of the name of this game is, yeah, not every drill hole is going to hit. Not every resource is going to become economic. But yeah, as long as you're winning more than you're losing, you're doing fine. So
Well, hold on. There's a nuance here that's important because you're asking about what I've learned. Obviously,
mm,
winning you're losing, but that's not what I said, or that's not the only thing I said. I said I'm winning on more of my speculations than I'm losing on speculations. So
right.
Rick Rule, for example, he's famous for saying that this is a business. If you're going to speculate, you have to understand you're going to lose on more of your speculations. You're going to win, but your
Yes.
baggers and your very high multiple winners will amortize, to use his language, it will amortize the losses and more than. So your average gain is positive, even if you lose on more trades than you win. And what I'm saying is I've departed from that. He knows it. I'm not throwing him under the bus here. His method works for him, obviously, but I'm I'm more risk averse. I hate losing money. And I
Mm,
absolutely hate hearing from clients who lose money. I remember their pain in 2008, and I remember the grind low from 2011, 12 on down to 15, 16.
yeah.
Right. So I am, I, I am trying to, I want to win on every stock. Nobody can do that, but I'm not just saying, oh, worth a punt or whatever. And my track record shows that even if I don't have always big wins, I have enough big wins, and I have enough avoiding of huge losses that I win most of the time. And the average gain, I forget what it is right now. It's 40 some percent. So we do okay.
Mm, yeah, that is very good. And so from here, there's sort of two directions. I mean, one, I want to talk about more about the due diligence, but the other is timing, essentially. And we talk about sort of greater market conditions, whether or not it's global economic cycles, or how hard is that, I guess, like you're talking about educating investors and readers, how hard is that piece to educate into people that, sometimes this is really just a timing game with how commodities are relevant to the greater markets around the world. And sometimes you just have to be patient, and that patience sometimes needs to be years.
So I guess a couple of things. Well, each investor has their own investment time horizon, and that's fine. And if they know themselves and they know that they're patient or impatient and they invest accordingly, that should shape their plan. So there's no one right answer here from that.
Mm,
What I can say though is, as a speculator or really as an investor, I think in the post Lehman world, all investors are speculators, and
right.
they're kidding themselves if they think they're not. I mean, just look at all the wacky things done, after the pandemic lockdowns and so on. You know, things like Tina, right? There is no alternative. Forced people to become speculators in search of just even basic minimum yield.
Mm,
So you have to make forward-looking guesses, right? And so market timing, everybody will tell you, any experienced person will tell you, nobody can time markets reliably. It's a fool's errand, right? So, but that you still have to look forward. You still have to say, where are things going? So there's a couple things that useful takeaways here. One is another Rick Ruleism. He likes to say, don't confuse the inevitable with the imminent. Right.
mm,
Source of a great number of mistakes is again, to earlier what we were saying, believing your own story, your own narrative, and convincing yourself that something you think is inevitable, the demise of the dollar or whatever, right, is imminent. And then it just doesn't happen. And if you invested, being too early is the same as being wrong in the investment world.
mm-hmm,
Sometimes it just never happens. So, uh, so I take it a step further, never mind inevitable, and I don't even want to hear about imminent. I want to see what's happening now. So if you
right.
invest on trends that are visibly in motion now, and that tomorrow politics could intervene, and a solid looking trend could come to a screeching halt, but that's rare. Usually, if it's a macro trend that's happening now, it's a global trend or it's an economic trend in say, the West with uranium, right? And the division between East and West on uranium or things like that. Like, these are powerful trends that
Mm-hmm,
they can't just stop on a dime and give you 5 cents change. So if it's happening now, and you think it's likely to deliver for you in your time frame that you've done, you're not market timing. You're not pretending that you know where the bottoms or the tops are. You're jumping aboard a train that's moving in your direction.
Mhm.
And I think that is a reasonable way to put the odds in your favor. Of course, back to the lessons from the early part, you can't be in denial when things don't work out. You know,
Mhm.
if you jump in a market and it crashes, you got to take your lumps. And if you don't, then you won't have any cash when it does become oversold and it's time to buy.
Right. So to kind of touch on those trains that are in motion and things, you kind of mentioned uranium, and I wanted to talk about that. Obviously, it had, great run in 2023 up to highs in January of 2024, up I think early February. There's sort of a mixed sentiment now we're talking about it in terms of this kind of EV revolution, clean energy progress, it being a very, very reliable source. There are many projects that are coming into play. What are you thinking? Do you think there's room for uranium as a commodity to continue rising in price? How does the supply demand look, I guess, in the East versus the West? And is there, yeah, I guess what catalyst would
Sure.
drive any
This is
changes in that
absolutely
market?
one of those trends in motion. It's one that's happening now. The
Mm,
demand side is just it's massively skewed towards the demand. Like the demand not only is not going away, which was a legitimate fear 5 years ago, or certainly
yeah.
10, it's just not going away. It's like huge. The BRICS countries are building these things as fast as they can. China has scores of them on the way, and other countries are trying to ramp up as well. Even Europe has pivoted towards nuclear. You know, it's part of the green taxonomy now, despite Germany's objections. Eastern Europe, where they're very pragmatic, you know, even Ukraine has a bunch of reactors in the plans, and people not at war, you know, Poland, I can't remember whether it was Czech Republic or Slovakia, but I think I heard about another one of those similarly, not just thinking about it, but, you know, contracting or choosing contractors to start, you know, building these things. So this is happening now. This is a classic example of happening now. Um, Now, as far as how to execute on this, you know, the uranium price, uranium is one of those things, kind of like lithium, other things that end in It's not actually rare.
Yeah.
It was an industry in liquidation for a long time. There were secondary supplies. The price got whacked. Um, and it takes time, and particularly uranium being, you know, a fissile radioactive material, the permits needed to produce it or even have anything to do with it are a little bit above and beyond what it takes to build the, you know, your average gold mine or something like that. So what I'm saying is it's not rare. High prices can be expected to cure high prices, but it will
Mhm.
take time. So, and this is important because uranium, as you were pointing out, it already spiked up to over $100 earlier this year. It's corrected down into the 80s, but the 80s is at or above the incentive price needed to bring new supply to the market. There
Mhm.
are the existing producers are ramping production back up again. Some of them are having trouble, but the point is they're doing it right.
Mhm.
And the lower cost development projects, they're already being built. Some of them they're at the point now of delivering new uranium to the market now. So it's a legitimate question to ask yourself: is that it? At $80, that incents new production, or high prices in the process of curing high prices? And my team and I have looked at this, and our answer is no. The low hanging fruit, the uranium that can be brought to market quickly, yes, that's happening now, but it won't be enough. And also, even the best, biggest, most experienced companies in this space are having a lot of trouble doing this ramp up, bringing the pounds back. So even some of the expected pounds coming back onto the market this year are already gone.
Mhm.
You know, the world's largest and lowest cost producer, you know who I'm talking about, right? They yanked their guidance for 2024. And as you and I speak, we're waiting to hear what they're going to say about 2025. And
Right.
I don't think they're going to pull it off. So the demand, you know, it's going nuts. The supply, it's constrained and there's problems there. It's just a beautiful situation of supply and demand where the trend is your friend. And the
Right.
only one last caveat I would throw in there is that, you know, you talk about even a trend so visibly in motion as this can come to screeching halt. I do think a Chernobyl scale event would cause that to happen. You know, these are very rare. In fact, Chernobyl is the only such event in all of nuclear energy's history. Fukushima, it was a tsunami. 3 Mile Island has more scare than event. I mean, nobody got
Hmm.
hurt, right? So there's really only been one bad event, which was arguably more about Soviet stupidity than nuclear power engineering. So I'm not really worried about this. I personally have money in this space. I'm willing to bet there, but I just think it's irresponsible to tell people there's nothing that could go wrong here. And
Hmm.
if something goes wrong, it goes badly wrong. So this is a space where I'm very bullish. I'm looking to put more money into play, but it is money that if I couldn't laugh off losing it, it is money I could afford to lose because
Mm.
the stocks you know, could crater on the wrong news, like faster than you can sell.
Right. Yeah, one event. And it's an interesting comparison you made to lithium because, like you said, not incredibly scarce, but when the demand skyrockets, that really creates that rush. And there's some interesting applications within uranium and nuclear reactors. A lot of kind of modular or more mobile type systems are being a lot of R&D, nothing quite brought to market yet, but potential applications in the mining space to replace,
Well, the
diesel.
Chinese just tested a new pebble bed reactor, uh, and they deliberately let it overheat, like took their hands off the controls to see what would happen. Theoretically, as it heated up, it should have become less efficient and it should have stopped itself. And it did. So,
Mm.
in terms of a safety test, it was a pretty phenomenal test. But that's new technology. There's also the small modular reactors. The Chinese have built one. The Canadians are building one. The U.S. is talking about one. Gates and company want to do it. So it's that's still more in the perhaps inevitable moving towards imminent category, but it is something. It's in motion. And by the way, sorry, none of these SMRs, no, or micro reactors either, by the way, like the ones you can put on a truck,
Hmm.
none of that demand is in any of the supply and demand models that I've seen anywhere.
Interesting. Yeah, so that could be a big catalyst for increasing the demand. And you mentioned Bill Gates. He's come on record recently saying that he believes that there's enough domestic supply within United States and Canada to fulfill the demand, and he's making moves into the space through TerraPower. Are there districts, regions for uranium that, I mean, obviously we know about the Athabasca Basin in Saskatchewan. Where are you paying the closest attention to?
Well, I mean, he's right. Again, uranium isn't rare,
Hmm.
but the time it takes to make an economic looking discovery, to permit it, to build the mine, that is a long time. I can't independently verify this, but I just saw a report. I tweeted about it that the average length from discovery to production in the U.S. has gone to 29 years now. And if you look at like the Resolution Copper fiasco and things like that, I can believe it. Okay, something not so controversial, a small gold mine, all right. But these big mega projects or something that scares people, like uranium scares people, it's not entirely rational, but it does. It is what it is, right?
Hmm.
But there's no question that uranium is there. The question is, yeah, how fast does it come to the market? And that's what I'm saying. I do think that eventually high prices cure high prices. But that's probably going to take a decade. And it
Yep.
assumes that the demand scenario is just sort of as projected now. If these SMRs and the micro reactors just blow the lid off the demand, then even that will turn out to be not true. It just takes time to bring mines online, especially uranium mines. So it's not about, I mean, ultimately, it's not about supply. It's about permitting and regulation.
And yeah, and then the needed drilling to build out the resource and the reserve. I think there's Weda Bay, the Weda Bay mine, the nickel mine in Indonesia. It was first discovered in 1996 and now has just become the largest producer of nickel in the last 24 months. But that's a great example of just how long it takes for something to go from discovery to impacting the global supply. Um, so to jump into the due diligence side of things, there's so many different angles to look at, whether or not it's the people, the project, the commodity, the jurisdiction, and there's sort of key pillars that we always tell investors you have to look for. But in terms of kind of getting more in depth, what do you think are the things that takes an intermediate investor to a more advanced and sophisticated investor in terms of due diligence, whether it's understanding the commodity, understanding the jurisdiction, or the team? What are some tips there?
Okay, I will answer that. But before we move on from happening now, I just want to briefly mention that, that gold is happening now. And this makes me uncomfortable personally to say that at $2,400 gold. Like it seems like, that's near to an all-time high price. So, I don't want to be the guy encouraging people to buy high and hope to sell higher. But the things that are historically bullish for gold, those are still in front of us this year. Even never mind tinfoil hat theories or even people like me still adhering to the hard landing outlook. Just going with the mainstream. The markets are pricing, last I looked, like 94% odds of a rate cut from the Fed in September. And so the beginning of a rate cutting cycle is very bullish for gold. So even the mainstream outlook right now is bullish for gold, which is why you have like the Bank of Americas and of the world companies like that projecting 26 to $3,000 gold by the end of this year. This isn't a gold bug tinfoil hat thing. This is a mainstream company, a bank, making that sort of prediction. So never say never, but it is visibly happening now.
Yeah.
And gold has held up well despite major headwinds, resurgence in the dollar, the dollar on the Forex market, weakness in Europe, things like that. And still you have gold flirting with all-time highs, at least nominally. So there's real support here. And I don't want to get too far down that rabbit hole because you asked me about due diligence, but I just want to say in terms of happening now, gold joins that, and it does look like the data supports silver going along with that. And for other things, there's really not much there. You asked about lithium. I think maybe after the recession has done its worst, that'll be interesting to look at. Nickel, I'm not so bullish on. Copper and oil, absolutely. Coming out of the recession, that's a very forward-looking statement on my part. I don't include them in happening now, but I think they absolutely will be once the recession is in the rearview mirror.
Okay. And maybe let's
want to say something before I get into the due diligence question?
I think we could stay here for a moment, actually, but yeah, please.
All right. The first thing is, first and foremost, is you don't have to fly around the world the way I do, kicking the rocks and hammering on them. And I have to say, I've learned a lot of geology, but I still don't lick the rocks. I let the real geologists do that. Because the engineers pee on the rocks when the geologists aren't looking. But anyway, it's great to be in my position to be able to do that and have a lot of fun. It's the most fun part of my work is that boot leather application in the field. But just caring enough to scratch beneath the surface already, Pareto rule, 80-20 rule. If you go to one of these conferences, and I don't accept referral fees or what do you call it? I don't accept commissions from any of these mining conferences for telling my audience to go there. They will offer. There are referral links that they send me, but I never accept any money from them because I want my clients to understand I work for them. But I sincerely believe that just getting off your butt and going to these places and talking to the CEO at the booth, he or she will often be there. Or if not, the geologist, and look them in the eye, ask them questions. How much is that going to cost? How much money do you have in the bank? You don't have to have a PhD in geology or finance to ask these kinds of questions. And if the guy is going like this, I don't know, I have to ask my CFO about that. That's bullshit. Either he's incompetent because he should know, or he's lying. So that's the first thing. Just caring enough to do some due diligence. You can't just read their PowerPoint. You need to do some of your own due diligence. The company, even the best and the most honest ones in the business, they're never going to volunteer all the troubles that they're experiencing. If they did, no mine would ever get financed or built because they always have headwinds and problems. So It's your job as the investor or the due diligence guy to understand you're on the opposite side of the table. You got to ask hard questions. You got to do some of your own digging. If you don't have a travel budget, you can read the local press, even if it's in Chinese or Spanish. Google Translate. it may not be perfect, but you can find out if they have bad press locally. Are there protesters there? It's amazing how powerful the tools are these days to do some
Hmm.
virtual due diligence, even if you don't have a travel budget. But that's the main thing: is just try,
Yeah.
look, ask questions. Get off your butt. And get out there. Some people even on your butt. I have people who, I say, well, read the financial statements. You can do forensic analysis of the financial statements and learn a lot about the company.
Where
If
they're
this is
spending their
early,
money.
it's an early stage company and they already have a 500,000 shares outstanding and they're not from Australia. The Australians have a weird thing about share structures. But a Canadian or US company that has hundreds of millions of shares issued and outstanding, and they're an early stage exploration play, that's not right. How do you get that much paper issued and outstanding if you haven't screwed up before? I mean, somebody was profligate somewhere along the way, or maybe they decided to be a dot-com company 20 years ago and then pivoted to a pot company, 10 years ago or whatever it was. And now gold's hot. Now they've decided they're the experts on gold in Nevada, right? The financial statements can help you do that kind of due diligence research. And I've had people complain, those things can be 80 or 100 pages long. Yeah, you want to make $1 million, you want to make big money, and you're not willing to read, and you don't have to read all 80 pages of it. You can thumb through to the key points and so on. But at least try. Even
Absolutely.
sitting on your butt, there's due diligence you can do that I guarantee you, at least 80% of the investors out there won't do if you
Hmm.
just.
Yeah, and I like you're saying, even Google Maps is one of my best friends when just, trying to get an understanding of the landscape. And I'll do a quick plug for miningbook.com, where you can see all of the financials very clearly laid out. You can see the insider trading and the rest of that. And I use it every day for just, the cash balance isn't always up to date, depending on if they've, raised money in the last quarter, but you can get a pretty good idea skimming through a few press releases whether or not there's money in the bank. And and then you can also see, I mean, how much are they spending on G&A, how much are they spending on drilling, how much are they spending on marketing, and those are important kind of figures to compare to each other for sure. Um,
By the way, I won't say which company, but I was able to use Google Maps to find drill collar locations in the field on my own, before the company knew I was there, and check out
mm,
the local conditions. And their own maps had sort of obscured the location, but there was sort of this, and they didn't give coordinates, but there was this loop in the river, and I was able to find that on the Google Maps, and I could figure out where the drilling had to be, and I did, and I found it. It was interesting. Anyway, so yeah, there's tools out there.
Absolutely. And so, big news in our sector, and I'm going to shift gears here a little bit to Victoria Gold. You had actually been on site examining the mine 2 days before their heap leach pad collapsed. There's an example of, I was on Google Maps trying to understand the position of the pad in relation to, the river and the rest of the operations. Um, I guess, can you walk us through kind of two parts here? One, like, how were things looking on your trip? I don't know what you can share with us. How was the energy? And then I guess like what status is the company in now? Obviously, there's been,
Sure.
we talk about massive sell-offs. What are we
All
looking
right.
at
Well,
here?
I don't typically talk about single companies, and I try not to, give away the special sauce that clients pay me for. But this is an industry wide issue, because it's it's not just this particular, disaster itself, but it's the second one. I mean, there were the tailings dams issues a couple of years ago. We had Imperial, and then we had Vale. Pretty scary stuff. But this is the second one in less than a year of a heap leach pad, and
Hmm.
as quick as, like, this is really interesting to me, because you could say, okay, well, those evil mining companies, they went cheap on those tailings dams, they didn't spend the money to make them safe, they're all they care about is profit, and they don't care about the people. But let's say that's true. They're all scum of the earth mining CEOs that just want to rape the earth for profit and forget about the people, right? If that's true, okay, maybe you don't spend as much money as you should on your tailings dam. You don't skimp on your heap leach pad. You haven't got the gold out yet. You know, you don't want that gold running away down the valley before you've got it out of the ore. So that's not where you skimp. So I just I just don't I don't buy that narrative of and so to answer your question for this one, when I was on site, things looked very orderly. I have been on sites where things were either like so disorganized, or messy, and people. It's obviously inefficient. At the very least, it's inefficient. People wandering around looking for things because they're not well organized,
Mm-hmm.
or security is lax, or that sort of thing. And there was nothing like that at the Victoria site. It looked like a well-run, mine. There were, and the employees that we saw that were not part of the tour, they weren't like scowling or whatever. I've seen press reports that the security and stuff was not tight. It looked like those reports are based on comments from disgruntled employees. I don't own the stock. I'm not trying to promote it. I'm just answering your question. My
Mm-hmm.
view from having been there on the ground was that it looked normal, like a well-run, it was clean, tidy, well-run, well-organized mining operation. There were no red flags. Besides, there was one thing. On one of the pits, there was a small earth movement. A part of, one of the benches somewhere had collapsed a little bit. And so there was a rock slide into the side of this pit. But it was quite small, and it wasn't a threat to anything. The operations were continuing that pit. If anything, the sort of inverted ziggurat design of the pit did what it was supposed to do and contain that rock before it hit the bottom part where they were mining. But what's interesting about that is we saw that, and one of the guys on the tour said, "Hey, look at that! What's that? Should we be worried about the stability of your pits?" And this person even asked, "What would happen if your tailings dam slid like SSR Mining's did 6 months ago?" And management was like, "No, that was a small one thing. We monitor all the time. The rocks is okay." And we have sensors on the leach pad. We can tell if anything moves a millimeter, alarms go off. We'll know. We have procedure and all that stuff. Everything's fine. Clearly, it wasn't fine. On the other paw, being a wolf, I can say that the procedures worked. Like the alarms went off. It happened at 5 a.m, I understand, something like that. And the alarms went off. People immediately got out of the way. Nobody was hurt. Like people did what they were supposed to do. And the other thing is I've heard, the company was cheap. They put this thing up near the mine, up in the hill where it could have an accident and slide down the valley because they didn't want to spend money on building a new facility somewhere else. I just don't agree with that. They built it in this valley next to the mine, sure. Less haul distance, great. But the thing about this valley is that it pinches at the bottom.
Yeah.
So instead of having to build, this dam that goes all the way around it or something, or they just could build a small dam at the bottom where the valley itself pinches and constrains it. And so in case the worst thing happened, your dam fails, most of the ore would just stay there constrained by the valley. And that's exactly what happened. The worst did happen. The dam failed, and most of the ore just stayed right there on the pad. I think a good 80% or more of it just stayed right where it was.
Mm-hmm.
So I think that was actually good design. So again, I don't own the company. I'm not trying to gild the lily here, but the failure, whatever it was, something failed. It's not necessarily management's fault. It could have been one of the suppliers of some of the materials or something. We just don't know yet. But I think the design did what it was supposed to do. It contained most of the damage. Down this valley, there were containment ponds. Those were not breached. Apparently, some small amount of cyanide did escape the property boundary, but not a lot. And it's already gone back down. So it looks to me, and I don't want to dismiss the concerns of the First Nations and so on, but as mining disasters go, it looks to me like the company did things as best as they could. The thing was contained, and the damage is pretty small, and it looks like it should be containable, clean upable. We'll see. I'm not an engineer. I can't promise that. But it looks like things are going the right direction. I mean, the worst case scenario, I suppose, is the company goes bankrupt and then they can't continue to mitigate, can't clean it up. And then,
Hmm.
okay, the government has to take it over, and maybe they can, but that would still be very bad. If the government is forced to take it over, the taxpayers are on the hook for this, then that's a more painful situation, longer to recover from for the mining industry. And sorry,
Hmm.
one last point. Just out today, I saw news from the big tribe. I don't want to mispronounce their name, NNDF, whatever. Um, they put out a statement calling for a moratorium, a suspension of all mining activity on their lands in the Yukon, which is a big thing to ask for. But even in that statement where they say this is serious, needs to be taken, they're angry at both the company and the government. Even in that statement, they don't say we want all mining to stop forever. Or,
Hmm.
forget all mining. They even in that statement, they say we understand there are a lot of jobs at stake here, that mining is important to the Yukon, but they want it done right. And honestly, that's not an unreasonable thing for them to say.
No. Yeah. Yeah. And there's a lot like, and I think I would definitely agree with your sentiments there because if you look at the topography and of where that pad was, and like you said, it fell back into that valley, and if you look at the distances between, where the slide was to that river, you're over 400 meters, I think, so quite a distance to travel. Um, through that valley bottom before you would get into the waterway. And yeah, I think the initial reports of cyanide levels were already within acceptable release amounts of treated tailings and that type of thing. So not a good headline at all. So I guess talking about buying things that are sold off, and I don't know if you're already giving this to your readers. When I that's one of the things I look at. Company is sold off by 90%. Is it recoverable? Is there an opportunity there?
Well, um, that's one of those things where I really don't want to give away the what clients pay for.
Well, we'll go
But
with we'll say go to independentspeculator.com and get a subscription
yeah,
for
we
that
have
then.
covered it. But I guess I just throw word of wisdom out there. When this happened to SSR, they had other mines. They had revenue
Yeah.
from other areas where they could redirect. And it's still, I mean, it was a big enough problem. And particularly if the government there in Turkey had been more aggressive, find them on top of everything else in big ways, that could have bankrupted the company. But at least they had revenue from other mines to keep going
Mhm.
and do the work that was needed to try to recover. This is a single asset company. That
Mhm.
asset is no longer generating revenue at all. It's just become a huge expense and liability.
Yeah.
So that, I think, is a legitimate concern. Let's just leave it at that.
Yeah. And I mean, they are sitting on a fair amount of debt, and not only debt, but their accounts payable was pretty sizable at the time of the collapse as well. So we'll shift out of that, but stay on gold because I think you're mentioning before we got into this, there's still room to move. And I want to ask, do you subscribe to the commodity super cycle in terms of um, long multi-decade cycles?
I do, but it's pretty erratic and irregular. And people want to think of it as like this big long wave, 20, 30-year wave, and they go up and they go down. And if
Hmm.
you look back at the history of the CRB, for example, and so on, it's not really like that.
Right.
Um, and there is contracyclicality. There are certainly times, even years, where, say, the monetary metals will move in an opposite direction to the industrial metals, because the very thing that's causing industrial metals to go down, economic difficulty, boosts safe haven demand for monetary metals.
Hmm.
And then there can just be, political or technology changes. If the one of the two hot wars, shooting matches we've got going off in a big way in the world, the Ukraine war, if that gets bad enough, suppose the suppose that the palladium stops flowing from Russia, either because of what the West does or because Putin says, screw you, you can't have any more of my palladium. It's not the only source, but it is the biggest single source of palladium in the world. So, I'm not terribly bullish. No, I rephrase that. I want to mince words. I am not bullish on any industrial metals until I'm sure that the recession has done its worst. Quarters immediately ahead. That includes platinum and palladium. They are industrial metals. So I'm not bullish on those. But if you just can't get it anymore, if Russia just says we're not selling any more palladium, and by the way, it can't just be won't sell it to the West, because if they're willing to sell it to China, and then the Chinese don't buy from the West, they have that Russian supply, like the other supply can go to the West. So it would need to be a bigger disruption than just we're not selling palladium to American car companies or European car companies. I'm not sure what that would look like. But let's say somehow the Russians managed to stop the flow of palladium to the West in some way. That would create a price move regardless of the recession. Like you still got to have it. You're still selling some cars. You're still building some cars, and the catalytic converters for the gas engines. Right now, most of them use palladium. So you could retool for platinum, but that takes time. That it's some have said it's happening now, but the evidence suggests that if it's happening, it's going very slowly. And that's a whole other country that becomes a basket case. If most of the world, or the largest source of palladium is Russia, well, the largest source of platinum is South Africa, and that could implode at the drop of a hat too. So I'm actually not making a bull case for either platinum or palladium now. I'm just saying that it's the sort of thing where if the right market conditions happen, that you can see the price respond regardless of economics or the super cycle or whatever else is going on. So, if you track the metals separately and you're looking for these long wave cycles, you'll find, they kind of sometimes rhyme, but this one's going that way, this one's doing this. Suddenly that one tanks. Oil goes to negative $30 in 2020. That really wreaks havoc with your super cycle correlations.
Okay. So the current thesis is that the monetary metals are still in an upward trend, gold, silver, and then the industrials are, you've mentioned recession a couple of times here. I guess can you walk us through quickly on, because you've spoken about this in your writing with office leases still haven't come back to pre-pandemic levels and a few other indicators. Are you seeing a drawn out recession, or are you seeing what's your view, I guess, US specific and then globally in terms of?
Well, I think the world is arguably in a global recession. I mean, there's a lot of weakness around. You could say, oh, well, China's still growing 5% a year. Well, they're struggling to hit that. And by Chinese standards, that's not all that much growth. And there's ongoing problems now that the Chinese have just cut again, surprise cuts, and it doesn't seem to have done any difference at all. So I see stagflation at the very least globally, and possibly in hindsight, we'll say, oh, that really was a global recession. I don't think US exceptionalism works in this case. I do think the US is arguably, at the very least, in a rolling recession. We just had, was it Philly manufacturing or was it Richmond? I'm not sure, but we just had another 10th month in a row of negative manufacturing output, right? The manufacturing recession in the US is still a thing. So there's a lot of moving pieces here, but to answer your question, I think the hard landing still comes. I think the US labor market isn't just starting to show signs of cracks. That one bastion, that laborer consumer that's held up that US economy, despite what's happening in the rest of the world, it's showing signs of cracks widening.
Right.
And I think that's one of those things that it's nonlinear. It's not like, oh, unemployment went from 4% to 4.1%. That's not a big change. It's going like this, right? So it doesn't, and it doesn't just stop, right? Oh, it's gone like this. The lines have crossed and it's going up, and I think it accelerates. So I think we see not just continuing, but I think we see worsening in the US labor market. I think that, causes much larger systemic things that the retail sales are already showing the response there. So if I'm right, by the end of the year, we'll see unmistakable signs of real recession. Now, here's the powers that be have already decided this is unacceptable. No fault of their own is an established excuse to send people checks in the mail, and not just $80 or something, like thousands of dollars. So a recession is obviously not anybody's fault, though it is if they voted for the people who caused it, but never mind. I think the money helicopters will fly. So when people say, oh, hard landing, I'm not predicting like the Greater Depression. If the powers that be lose control, maybe Doug will finally be right about that. I'm not even predicting a normal, like usually recession lasts a couple of years. I don't think that's going to happen either. I think the moment it becomes obvious that we're going off the rails, the money helicopters fly again, or money bazookas, or whatever metaphor you want. And the odds are pretty good that they'll get another reflationary boom going. And if they do that without the Fed having beaten inflation, gotten it all the way down to 2%, it'll be really interesting. Even if they did get it to 2% and then go screaming right back up again, it's obviously inflationary if that's the response. And gold doesn't tend to move with CPI; it tends to lead. So in a way, I think the gold market is, if that pattern continues, the gold market is telling you that inflation is heading higher, and that's maybe, not just U.S. investors, but it's global markets saying, the Fed is going to pivot, and inflation is going to go back up again. So I'm not sure where you want to go from there, but my outlook is recessionary, stagflationary in the US and globally. I think that's very good for monetary metals. And maybe the last point, because I've made a lot of waves in the market by being cautious about including silver. Yes, it is money. Yes, it's still a monetary metal. But over the last year, it has correlated more closely with copper than gold. And, silver bulls will tell you that in a bull market, gold leads and silver by the end more than catches up on a percentage gain basis. That's been true since 1971 in all cases, except the most recent one in 2020. So, the market is telling you, it's giving you data that something is different here. And I think that warrants caution. But we have seen silver reacting very strongly as a monetary metal this year, specifically this year, moving with gold at times where copper and oil are going down, which is what you want to see in a monetary metal. So my takeaways here are very simple, and I've covered this. I call it my marching orders in my free weekly letter. My marching orders for some time in this context have been, I'm interested in gold, silver, and uranium, and that's it. There's literally nothing else I'm speculating on right now in my resource speculations. And I'm very bullish longer term on oil and copper and other things, but everything else, I'm going to wait until that we have that recession capitulation. I'm not looking for years and years of recession. I'm looking for that, beep moment where right. The money helicopters are going to fly, and then I that's when I start hopefully loading up the truck on bargains that'll be available at that time in the best, most certain industrial metals or minerals.
How much of that, kind of waiting and this sort of slowing of labor hiring and things like that, do you think is breath holding related to seeing what artificial intelligence and AI is going to do?
Optional tailwinds. Like people are saying, the electric cars are going to take a lot more copper and lithium or all these other things. For lithium, that's true. If the EV push fizzles, that's very bad for lithium. But copper is required anyway. I mean, it's why it's called Dr. Copper, and was long before the electric cars came around. So the electric cars are just a boost for copper. And if it doesn't happen, demand is still there. Oil, obviously, the one that seems most affected by the AI phenomenon now is nuclear. It's another argument for nuclear. But even without that, the demand was already there. China was already building as I say, scores of reactors with before the AI thing. So if it turns out that it really does push demand, through the roof, then it's just, an extra tailwind for uranium. And if it turns out that tomorrow Intel announces a NVIDIA killer chip that, by the way, uses 1/50th the energy that NVIDIA does, I'm not a technical guy. I can't say when that'll happen. I can tell you that everybody's got to be working on that.
Mm-hmm.
So I don't know where that goes, but it's like optional. If that turns into this huge tailwind that doubles demand for electricity in the next 20 years or something in the world, great for nuclear. And by the way, the windmills and the solar panels are not going to be up. You will not be able to do that without nuclear.
Yeah.
But if not, we still need it. So I'm a bull either way.
Okay. So maybe we'll end with one last thing, and it's kind of touching back to sort of the sentiment that the team had in 2008, which was sort of the belief that you wouldn't be able to print your way out of this, and the potential now is that we're going to inflate our way out of anything. Um, I guess, where is the catalyst when we talk about debt to GDP ratio, or we talk about servicing, federal debt, servicing the interest on federal debt? Is there a catalyst there that you see that's like, this is sort of as far as we can kick the can down the road? Or do you think that, we keep going until potentially we develop an entire new monetary system and just convert everything over?
Yeah, no, there's no catalyst. There's certainly no one main catalyst. If your audience is familiar with the dollar milkshake guy, Brent Johnson, I think he makes a lot of sense. I do think that global dollarization is a trend. It's ongoing, but it takes decades till we get to the point where, either a tipping point where it just goes poof, or it just fizzles to a point of irrelevancy where nobody cares so much about the dollar anymore anyway. That takes a long time. And his arguments for how the financial system globally still requires dollars. I mean, the Argentines will borrow money from Europeans in dollars, denominated in dollars. And that certainly doesn't exist with, the yuan can't do that. Even the euro doesn't have that type of market. So you could have, say, a major debt crisis. US debt to GDP goes higher than Japan's. And you would think that would just be impossible or unsustainable. And it would ultimately be unsustainable in some way. But I don't know that even that would necessarily mean the dollar goes up in flames right away. It could take a long time, because it's this form of TINA, right? There just is no readily available alternative. But in time, I do think that happens. I do, by the way, think that gold goes back into circulation as money. Not that I expect to be carrying a medieval coin purse around my belt, clinking along as I walk down the street. I think blockchain solves that. The digital transference of ownership of material is very convenient, and I can see that happening. My Darth Silver nickname comes from saying, if that happens, I'm not sure we need silver to make change anymore. But I actually think that's likely. I think it's likely for gold to go into circulation. What about Bitcoin or something else? I don't know. I don't think anybody knows. Certainly not the Bitcoin maximalists, who you can't even say anything to them without getting flamed. My answer to that is, let's just see how the market responds. I'm happy to let the market choose. And if it turns out to be some combination of commodity-backed tokens and other things, fine. We'll see what works best. But investment takeaways for today, this is all kind of theoretical, whatever. The big thing is just don't drink the Kool-Aid from people who tell you what you want to hear. If you hate the United States government's mismanagement of the dollar and everything they've done to it, and you think like Nietzsche, an object that's ready to fall deserves to be pushed, right? I understand, but that doesn't mean it's going to happen tomorrow. It certainly doesn't mean it's going to happen on time for your Moose Pasture Inc., to quote my friend Adrian Day, for your stock to become a 10 bagger that you were hoping for this year. So, I hate to be the professional stick in the mud, but just it's dangerous to believe your own narrative too much.
Mm, absolutely. Yeah. Well, you know what? I have 10 more questions, but we'll have to do them another day. But, Lobo, thank you so much. There's a lot of insights. We went a lot of different directions, a lot of great takeaways. So I really appreciate you sharing some of your experience and your wisdom with me and the audience today. It means a lot.
Yeah, well, thank you very much.